And for this chat, we have Ben Ford from Frollo, we have Sarah Bowles from EML, Michael Sabera from BeforePay, and Aaron Maharaj from Hashing. Please put your hands together for our panel here. And I am going to hand you over to Marie Mortimer from loans.com.au to take you through the next half an hour. Enjoy. Thanks, Marie.
Thank you. Welcome, everybody. Welcome to this morning's panel, The Role of Trust in Consumer Lending. I'm Marie Mortimer, Managing Director of loans.com.au, and I'm also Fintech Australia board member. Today, I'm joined on stage by 4 wonderful guests. They're very close to the ground when it comes to fintech in terms of offering products and services in consumer lending and partnerships to take consumer lending and neo-lending into the future. So before we start, I thought I'd whip around and get the panel to introduce themselves, tell us about yourself and the companies which you represent. And I'm going to start all the way over there with Sarah first.
Thank you. Sarah Bowles. I won't talk about myself. It's probably less interesting than EML Payments. EML Payments is a global financial technology business that provides, I guess, the infrastructure behind quite a few neobanks, fintechs, corporates, government payouts and stimulus here in Australia, as well as 28 other countries across the world. So we're really passionate about helping to solve, I guess, some of these problems that the fintechs are coming to us with around being able to build those experiences that solve for the trust dilemma. Thanks.
Hi, I'm Ben Ford, Head of Growth at Frollo. Frollo is a consumer PFM, personal financial management app. It's the first in Australia that uses open banking. Alongside this, we also have a B2B business that allows other organisations to leverage our software and build out financial products for their customers.
Hi, I'm Michael Sabara. I'm the Chief Operating Officer of BeforePay. BeforePay is a wage advance company. We give people a proportion of their salary that they've already earned in advance. But more broadly, we're concerned with holistic financial well-being. We also provide budgeting and savings to give people control of their entire financial life.
Hello, everybody. My name is Arun Maharaj. I'm from Hashing. Hashing is a mortgage platform. It's got almost 700 mortgage brokers using it every day to look after their customers through technology and also to use it as a data repository. We also have a B2C component, direct to consumers, where customers come to us if they want a loan or other property-related products, and we have dealt with trust issues in that sense from a consumer perspective. So I thought this was quite timely.
Great, thanks guys. So we have a strict timeline today, so we're going to get right into it. 10 years ago, I started loans.com.au for the first Mac Group. 10 years ago, there wasn't many online lenders in the market offering a full end-to-end home loan application connected to a fully serviced credit system on the back end. But things have changed. Now we have this concept of fintech, and there are so many more new neo-lenders in this space, so many entering on a day-to-day basis, it feels like it. And the traditional bricks and mortar branch banks are now online lenders too. And we've got a space that's just full of so much competition here in Australia. So I'm going to actually pass over to you, Aaron, first, because you're kind of in my market. You're bringing brokers and customers together on your platform. What are some of the challenges that neo-lenders face today?
Yeah, thanks, Marie. Look, I think that's a good question. The first thing that we find is brand loyalty. I think it's a very big challenge if you're a neo-bank or a challenger bank or a non-bank lender that's recent. We all know that setting up a brand is a challenge, but the very customers that will come to us are the younger demographics, the millennials, that we think will be easy to change. The guys who switch a lot, and that's the easy part when they switch and come to you. The harder part is keeping them, I think, because they've switched to come to you, they will definitely go somewhere else. So the loyalty of the brand is a big challenge, and you've got to keep working at that trust factor. Trust overall will cover, there's different kinds of trust, but the third thing I want to talk about is technology. One of the things with new lenders or neo-lenders is we think we have the best technology, but what we don't realize is our competitors or the consumers have access to better technology, and the actual needs require good technology. So rapidly changing technology requirements is a cost, and it's also inflexible if you can't do that. So that's a challenge. You've got to make sure that your platforms are built on a cloud structure that can be flexible and can be upgraded pretty quickly.
Yeah, I think that's important. We spoke about this before. You can be, up there in the technology space, but you can't be too technical when it comes to a customer, and that's really important. Michael, with Before Pay, you're offering wage advancing in your product offering there. What are you seeing? What are your big challenges at the moment over at Before Pay?
In terms of trust, it's really trying to enable consumers as best as possible and leverage their data in the most respectable way possible. I'd say one of the interesting things about traditional lending products and all of those kinds of things is you get assessed for your creditworthiness once at the start, and they assume that this perpetuates the entire consumer life cycle in perpetuity. This isn't always the case. People have different circumstances that change in their lives. One of the things that we do is we try to look at people's data for every single wage advance we supply them. We reassess their creditworthiness. We try to tailor the way that they repay those loans in a way which currently suits the circumstances. If we notice a customer who used to catch an Uber to Bondi Beach every Saturday morning, who no longer does that, rather eating Uber Eats twice a day at home, something may have changed, they're not in a good place. We're really trying to build trust by understanding our consumer on an individual basis and tailoring the product to them every single time. And I think this is a really important component of CDR and open banking in the future. The ability to actually stream data and help consumers in ways that were not possibly possible or imagined.
Yeah, I think that's important. You've kind of touched on probably the next topic we want to get into. We've seen some really cool things in Australia when it comes to CDR and open banking, and as much as data can be cool, we're really moving forward in what we're doing, and Frollo is at the forefront of what's going on there. It feels like every day you're out announcing some new partnership. You've got like Virgin Money, Canstar, ANZ Bank now. It's just amazing to see how far you guys as a company have come, and it'd be interesting to know how you see innovation and how it will facilitate, improved trust in financial services going forward.
Sure. I think, just to sort of finish off on the point from the guys just before, I think we're sort of seeing a move from very transactional type lending experiences. And I guess the problem is the level of repeat business there and the certainty around repeat business for organisations is really quite low, because once the term's finished, then someone's going to go to the next organisation. There's no real loyalty. So increasingly, we're seeing organisations like Before Pay, like others, like Wiser, some of these guys, some of these neo-lenders are sort of building out their product suite. So it's far more than just simply a transactional loan type of arrangement. There's more to it. They're doing things like helping people pay down their debt. They're helping people understand that they're not going to lend them more than they need. They're helping them be very clear and transparent about a credit decision and presenting credit scores to educate people around that. So I think that's sort of the innovation that's going to continue to develop, and I think otherwise, traditional lenders are going to find themselves sort of being pushed to the side, and we're going to get neo-lenders like the guys we're talking about really sort of taking over.
Yeah, and I suppose that concept of responsible lending becomes more and more important. I think I read something this morning. There was a white paper put out about consumers aren't so much concerned anymore about price. It's more about are they dealing with a responsible lender, and it goes back to the point Aaron you made earlier about brand loyalty as well. You can't just compete on price. Sarah, do you have anything to add to that? Because I know EML is doing a lot in the payment space, and I know if a payment goes really well, it's boring, but if it goes really bad, it can be not a good experience. So what are you seeing with regards to trust in your specific area?
I think what we see is that the trust is, and I think the guys touched on this earlier, there's an inherent trust when you start that relationship with the brand, but building it over time is really critical, and that increments of experience is what matters. So the consistency is really important. what we find when we're talking to particularly prospects and clients is that technology is changing really fast. We've got open banking here, we've got MPP, we've got talks about interoperability between different regions now when it comes to those technologies. And so to stay ahead of that, you either need a fully fledged large team of data scientists and developers and regulatory roles and risk roles, or the smart ones are starting to look at how do we collaborate, how do we partner. And so when we were sitting in the room with Frollo probably about 12 months ago, we were talking about clients that were coming to us and saying, we want to start doing something more with open banking, we want to start doing something with data, but we don't want to also manage a big, broad range of those vendors. So how can we actually use through EML and Frollo as a partnership to be able to create some of those experiences? So I think it'll be really interesting over the next 12, 18 months to see what are some of those new innovations that come out that actually solve for some of this trust issue, and leveraging the likes of the open banking data to be able to enhance that experience.
Yeah, I suppose consumers taking on open banking and using it, they want to be using it without knowing that they're using it, so it has to be quite seamless in that way. I'm going to swing around and probably touch on the biggest consumer lending product that we have in Australia right now. It's not mortgages, it's buy now, pay later. It's gone from a widely untrusted product to very much a widely adopted product and trusted. And now we've got banks like CBA offering it within their services. We've got the likes of PayPal with Pay in 4. Like, these are some big organisations taking a market-leading product that has come out of Australia in the terms of Afterpay and really adopting it. So I suppose it moves on to what's next. And I know Ben and Sarah, you guys have announced a partnership. It's on the T-shirt over there, Newer Pay. What does version 2.0 of Buy Now, Pay Later look like for you guys? Ben, or do you want to go?
I think it's predominantly about putting even more control in the hands of the consumer. So I think the success of Buy Now, Pay Later, no matter what you think about it as a sort of principle, is because it disrupts a process that was fundamentally flawed. I think it simplifies the process. It basically does everything that tech innovation or fintech innovation is designed to do. The user experience is absolutely second to none. I presume probably there's a good portion of people in this room who have used Afterpay, even just to test the process out. And it's the same with it's the same with Before Pay. The UX there is so good, and the utility derived from that is really, really positive, and therefore that sort of helps engender to some degree trust as well. It builds up that relationship trust. It builds up a sense that the organisation understands the person who's interacting with them. And I think we're probably going to see more curated experiences on that theme. I'll hand over to you, Sarah, and we can talk about maybe a couple of those and what they may look like.
Yeah, absolutely. I think building on that control piece, we see a lot of the consumer activity that comes through our platform, wanting to be able to, I guess, control those transactions down to the real-time point of that transaction. And so by being able to couple, either real-time payments through MPP or card-based transactions, which are real-time as well through the schemes, with the data through open banking, with the data through merchant IDs and codes, we're able to actually start to mimic, I guess, what the Barefoot Investor started talking about many moons ago, which was around those ideas of buckets of money and the ability to control that spend at the point where it matters the most. I think what's really interesting about the likes of Before Pay, and there's quite a few players now emerging in that earned wage access, is that you're going upstream. You're going now not to just the payment, but also the payment that's handling into the consumer's hands. And how do we allow them to access their money on demand and at the time that they've earned it, rather than two to 3 weeks later. So I think it's going to be a really interesting place for not just Buy Now, Pay Later, but just lending in general. And how do we make it more seamless? How do we make it on demand for consumers? And to Ben's point, make the consumer feel more in control and ultimately feel better about their money and their financial well-being.
Yeah, okay. And I know we talked about this a bit earlier, and buy now, pay later. It feels like it was something, and consumer lending in general online was demographic based. Are you seeing that in your data? Are you seeing it's adopted by a younger demographic, or is it a wider demographic that's kind of adopting the use of fintech and online lenders and buy now, pay later? What are you seeing in your data?
From our data, we're seeing it's not age sensitive. I think that's a bit of a myth, and maybe some of the early adopters are more skewed to the millennials, but we've got baby boomers, we've got Gen X, Gen Z, all sitting in there, Gen Y as well, starting to adopt it. So what we're seeing is those that are more comfortable, more confident in their financial decisions are probably the early adopters of some of this technology. But it's rapidly adopting. So as soon as you create a more seamless experience, and I think buy now, pay later was a great example of that a couple of years ago, they created a very simple way to be able to access money in advance that didn't have an interest rate to calculate, that didn't have a 5-year agreement that you had to pay a balloon amount at the end. And so I think if we can create more of those type of incremental experiences that builds on that confidence for consumers, you're going to start to see it not necessarily a demographical type of thing, but more an accessible type of payment option.
Yeah, I think that's important. It's normalising the adoption, facilitated by fintech. Michael, Before Pay, with what you're offering there with wage advancement, you've really got a responsible lending approach to how you're lending money to your customers. Can you explain that a little bit to us?
Yeah, so the process fundamentally is we ask customers for access to their bank account transactions. Using this transactional history, we can build a very strong picture of the current state of wellness of that individual. In doing so, we can assess the appropriate amount of money to wage advance someone, as well as what the best way for them to repay it in a way which will completely distress them, ensure that they're capable of paying it back, and ensure that the money afforded to them will tide them over. To what I was saying before is our approach is to continually reassess people. We know circumstances change. Massive contingent of our customers, if not most of them, are taking wage advances because something has happened. Their car's broken down, they've been left out in the dark a bit with a paycheck this week. In doing so, we're always ensuring that we're serving their needs. We were fortunate enough to have an incredibly customer-centric team, one in which we've looked at all the personas broken down from 9 a.m. in the morning till 9 p.m. at night, how people are accessing credit, what they're spending it on, and then how we can lend it to them or give it to them in the best way possible to solve their problems.
Yeah, it's fascinating. Your version 2.0 of an industry. It's pretty exciting what you guys are doing over there. I'm going to round it out before question time. Over to Aaron, and I want to really talk about where you see the future of lending in Australia and what's next. And Hashteen, you're at the forefront of that. Bringing the consumer and broker model together. So, what do you see in the future?
Yeah, it's a good question, Marie, but just before I answer that, can I just say on the buy now, pay later model, when we looked at that 18 months ago in the research, the trust really came from two things. From a consumer perspective, and we all understand this because if we've used it, it's pretty straightforward to use, the platform, and it's transparent. So the two big factors I feel for consumers was that started it, straightforwardness of a platform and the transparency. And then the other side that the likes of Afterpay and Before Pay and all these people have done well is partnerships. So if you go to a mall and you've got everyone displaying the brand, guess what? You've got trust there. And I think from a Hashteen perspective, the way our model works is when a consumer comes to us online, they can either get a lending product direct or they can come to a broker. And the partnership with the mortgage broker is very important for trust for a consumer. There's about 60% of borrowers in this country that are not simple borrowers. They are small businesses and they need a mortgage broker. So technology enables that trust. So if they deal with their mortgage broker using tech and open banking data in the future, it will solidify the lending space in this country. From a consumer perspective, we all know, we've heard of open banking. some of the leaders in that space are in this room. Open banking as a concept to a consumer really doesn't matter. A consumer really doesn't care. What the consumer cares about is something that's straightforward, that's transparent, and easy to use. And a lot of us, what we've found in our application forms and the questions we ask is the consumer is very happy to share information with you as long as they get a quick decision that they're going to get something or not. And I think trust comes when they upload something and instantaneously they know they're going to get something, so they carry on. I think we initially had a process where we had to get all this data and then assess, and I think the millennials coming through, they're smarter. They kind of look at your platform and know whether they're going to get something or not. And I think if we learn to simplify the processes, be intuitive. One of the things at Hashing we've got, and Marie and I were talking about this, is technology. In the lending world, technology is great, but if it's a mortgage, people really at the moment aren't ready just to do it online. They do need a person to talk to at the end of all this. So what we've got at Hashing now is we know where in a stage applicant is on our platform, where they are. We intuitively get our support center staff to call them if we notice they're taking longer on a page, and they appreciate the proactive calls. So and they feel there's a person there if they want to. Not all call, but they do feel a lot of trust.
Yeah, it's about technology helping the person, and yeah, as we were talking about before, mortgages are a very technical sale, so it can't all be done online because everybody's different, their needs are different and what they do. So I'm mindful that we've got 6 minutes left. It would be really good if we could maybe pass the microphone around and open it up to the floor for question time. I think Art's got a microphone. Does anybody have any questions? Otherwise, we're going to have to make up some stuff for the next 6 minutes, so... Do you guys want to talk? Oh, here we go, down the front.
What's an example of bad trust? Who don't you trust?
Bad trust, was it?
About trust, but we talk about what makes up trust and how you gain trust, but what would be the opposite? What would be an example of something you don't trust or bad trust? What would be the opposite of good trust?
I think to start, and I'll throw to you if you want, Ben, but I think, firstly, trust is broken out. I think it's a complex thing, and I think there's 3 components of trust. So when we look at it, there's the relationship trust. Do you have my best interest at heart? And I think that's the trust that's eroded over the last 12, 24 months, particularly brought on probably or accelerated by, the Royal Commission and some of the findings that came out of that. So we found where consumers' interest wasn't kept at front of mind of the decisioning at the time, or that there was access to the data and that data wasn't being used in a way to proactively help the consumer. I think that eroded the trust. The other 2 components of trust is prudential trust. Like, are you actually following the regulatory requirements to keep me safe and keep my money safe? And the third one is information trust. So are you keeping my information safe? And I think each of those can erode over time. I think where we're going to see some winners shine out of this is those that are actually using the data in a meaningful way to actually continue to build on the trust rather than to, I guess, take the relationship with the consumer for granted throughout the life cycle, not just at the time of originating or onboarding a new customer.
I think there's a couple of examples there. One would be mortgages, where there's better offers for new customers than existing customers, so there's no reward for loyalty in the mortgage market, and I think that's probably why there's a huge amount of refinancing in the mortgage market. And I guess the other thing would be people encouraging you to borrow more than you can actually afford, so not adhering to responsible lending and other principles. I think at the time that might be solving a problem for someone, but actually in the long run that's probably would lead to an erosion of trust as well.
Yeah, and I think open banking will really solve that problem, I think, pretty quickly if you're in that mortgage space, for sure. Michael?
I definitely agree around the open banking front. I think data trust, data security, data governance are probably some of the most pertinent things facing fintechs now. banks are a trusted institution in a sense. People trust fintechs to deliver certain services, but they also trust the big banks, the JP Morgan Chases, the big four banks are always going to be there at the end of the day. We need to work really hard on how fintechs actually collect this data through open banking rather than screen scraping, taking the security behind that data incredibly seriously, but also empowering the user. So allowing users to decide what granularity of data is provided, but also being able to take that data away at the end of the day. Right now, we don't have this. Data mobility between banks and institutions is very, very little. We're locked into a lot of things. Really, we need to start mobilizing consumers between products, creating competition, creating far more efficiency, and creating far more options.
Do you have anything to add?
Like, I mean, I think it's covered, but from our product space, which is mortgages and lending products, we all don't go and borrow every day. Like, once we buy a house or an investment property, that's it. And we all know in this country, we're so used to uploading income data, bank account data as a minimum. So for us, if you're applying on a platform, as long as transparency is there, that your data will be stored with us. And in open banking, for those that don't know, I'm sure you all do that, you can at any time stop your data being shared. You can, you'll be given an opt-out in 3 to 6 months, Tony. I'm not sure what I think it's 3 months, where they'll send you an email saying your data will now not be used. So there's a lot that the government is doing to make data secure in terms of trusting. As a fintech, our biggest challenge is to get people to use us and give us their data. But if things get quicker and they get results, I'm sure they will.
Yeah, I think it's that realisation at the end of the day that nobody wants a lending product. Nobody wants a loan of any form. They want the home, they want the car, they want what they're going to buy with that money. So I think that's a really important point. Do we have any other questions? Oh, over there. Got one.
Yeah, just wondering, with before pay, after pay, people are smashing lots of loans and getting into trouble. What are your strategies around vulnerable customers when you can see that they're not in good shape?
Sorry, can you repeat that? What is your strategy around?
Around vulnerable customers.
Yes, no, so this is an incredibly important point, and something I mentioned earlier in the discussion today. Open banking in particular is a great avenue to being far more aware and protective of vulnerable customers. As I said, when people take out a loan that can go for days, weeks, months, they're assessed once and the circumstances are never reassessed. They can go into hardship and suffer silently and go into debt. Something that we do really carefully is we're continuously looking at transaction records. We're always ensuring that we understand the current state of play in that customer. If the customer's going through hardship, if they've got an overdraft from their account, we're very cognizant of being proactive in how will we restructure repayments or, I suppose, amend the way in which they are in debt to us. It's not our objective to create debt cycles by any way, shape or form. And I think modern fintechs have to really start practicing using data to protect the customer more than just to provide them with more tailor-made products.
Excellent. Now, I think we're it for time. We're going to be kicked off stage now. So thanks, Ben, Sarah, Aaron and Michael for joining us today. I think it's an exciting time to be a lender. I might be a bit biased, but let's go with it. Thanks to everybody for joining us today, and please do enjoy the rest of Intersect.
Thank you.